Credit card companies are notorious for their enticing offers and rewards programs. However, they don't tell you that these cards can often lead you into a debt trap that is difficult to escape. The allure of instant gratification and the convenience of credit cards can quickly turn into a nightmare of financial burden. In today's video, we'll expose the debt traps of credit cards and reveal the 5 secrets that credit card companies don't want you to know. Credit card debt is a growing concern for many individuals and families worldwide. One of the biggest reasons for this is the ease of access to credit. Credit card companies offer unsecured credit, which means you don't need collateral to borrow money. They also offer high credit limits, often beyond what you can afford to pay back. The problem with credit cards is that the interest rates are very high. Most credit cards charge an average interest rate of 15 to 20%, significantly higher than other forms of credit, such as personal loans or mortgages. The interest on credit card debt can quickly add up, especially if you only make the minimum monthly payment. Credit card companies make money from their customers' interest and fees. They want you to carry a balance on your card and pay monthly interest. This is how they make their profit. They offer enticing rewards and cashback programs to encourage you to use your card more often. However, these rewards are often offset by the high interest rates and fees they charge. Here are the 5 secrets credit card companies don't want you to know. Number 1. Minimum payments keep you in debt. Credit card companies often advertise their minimum payment amounts as a convenient way to manage debt. However, the truth is that minimum payments are designed to keep you in debt for as long as possible. When you make a minimum payment, you only pay off a small portion of the total balance. The remaining balance carries over to the next month, along with interest and fees. Credit card companies want you to pay the minimum amount each month because they make more money from the interest and fee. If you only pay the minimum, it can take you years to pay off your debt, and you'll pay significantly more interest charges. Number 2. Introductory offers are temporary. Credit card companies often lure customers in with attractive introductory offers, such as zero interest balance transfers or cashback rewards. However, these offers are usually temporary and can expire within a few months or a year. Once the introductory period ends, the interest rates and fees can skyrocket, leaving you with a much larger balance than you started with. It's important to read the fine print and understand the terms and conditions of any introductory offers before signing up. Ensure you know when the offer expires and the interest rate after the promotional period ends. Number 3. High credit limits can lead to overspending. Credit card companies often offer high credit limits to their customers, which can be tempting to use. However, even though you have a high credit limit, you can still afford to spend that much. Using your credit card for purchases you can't afford to pay back can lead to a never-ending cycle of debt. It's important to be disciplined with your spending and only use your credit card for purchases you can afford to pay back in full each month. Refrain from being tempted by the high credit limit, as it can quickly become a burden if you're not careful. Number 4. Late payments can be costly. Late payments on your credit card can be costly in more ways than one. Credit card companies charge fees for late payments, which can add up quickly. Late payments can also damage your credit score, which can make it more difficult for you to access credit in the future. Your credit score is a reflection of your credit worthiness and is used by lenders to determine whether or not to approve your application for credit. Late payments can stay on your credit report for up to 7 years, which can impact your credit score long term. If you need help making your payments on time, contacting your credit card company and discussing your options is important. They can offer you a temporary payment plan or waive the late fee if you're experiencing financial hardship. Number 5. Balance transfers can be tricky. Balance transfers can be a useful tool for consolidating debt and reducing your interest charges. However, they can also be tricky to navigate. Credit card companies often offer zero interest balance transfer offers to entice customers to transfer their balances from other cards. While these offers can be attractive, they often come with balance transfer fees that can add up to hundreds of dollars. It's important to read the fine print and understand the terms and conditions of any balance transfer offer before signing up. Make sure you know what the balance transfer fee is and how long the zero interest period lasts. If you cannot pay off your balance before the zero interest period ends, you could end up paying significantly more interest charges than you would have with your original card. So how do you avoid falling into the debt trap? Here are a few tips to keep in mind. Number 1. be mindful of your spending. One of the easiest ways to fall into credit card debt is by overspending. While credit cards may offer a sense of financial freedom, it's important to remember that the money you spend on your card will eventually need to be paid back. To avoid overspending, it's important to be mindful of your spending habits. Keep track of your expenses and set a budget to help you stay on track. Number 2, pay more than the minimum payment. If you're only paying the minimum payment on your credit card each month, you're likely making little of a dent in your debt. The minimum payment is usually only a small percentage of your overall balance, which means it will take you a long time to pay off your debt if you only pay the minimum. To speed up the process, try to pay more than the minimum payment each month. This will help you pay off your debt faster and reduce the amount of interest you'll have to pay. Number 3, avoid balance transfers. Balance transfers are a great way to consolidate your debt and save money on interest. However, they often come with fees and can make your debt worse if you're not careful. While the new card may have a lower interest rate, you'll still need to pay off the balance in full before the promotional period ends to avoid interest charges. You need to pay off the balance in time to avoid being stuck with even more debt. Number 4, look for lower interest rates. If you have good credit, you can find a credit card with a lower interest rate. This can save you a lot of money in the long run. When looking for a new credit card, please pay close attention to the interest rate and make sure it's lower than your current card. However, be aware that some cards may offer a low introductory rate that will increase after a certain period of time. Read the fine print carefully to avoid any surprises down the road. Number 5, consider other forms of credit. Credit card debt can be a significant burden, especially if you're carrying a high balance with a high interest rate. If you're finding it difficult to make progress on paying off your credit card debt, it may be worth exploring alternative forms of credit. Personal loans and lines of credit can offer lower interest rates and a more structured payment plan that may be easier to manage. Personal loans typically have fixed interest rates and repayment periods, which can make it easier to budget for payments. Lines of credit, on the other hand, offer more flexibility in borrowing and repayment. Both options can consolidate your credit card debt and potentially lower your overall interest rate. However, it's important to remember that these forms of credit are not a solution to the underlying problem of overspending or living beyond your means. If you're struggling with credit card debt, it's important to address the root cause of the issue and make changes to your spending habits. So enough for today's video. If you found it helpful, give it a thumbs up, comment and subscribe for more videos. We will be back to you with another amazing video. Until then, goodbye and peace.